go. Just a bit of background. I spent the first half of my career, 15 years in the investment business. I sold my investment firm in 2010. Since then, I've been primarily focused on the gold industry and Golconda Gold and developing the company. And I currently live in Toronto in Canada. But for those of you who are tuned in from Hong Kong, I moved to Canada from Hong Kong, and I used to live in Kennedy Town. All the photos that you're going to see in this presentation today are actual photos from our operation. There's no stock photography here. We are a living, breathing gold mining company operating 365 days a year and 24 hours a day. And as a big part of the story I'm going to tell you is we, as a gold producer and one that's now debt-free or on a net basis and in production and growing, we really give investors a huge leverage to investing in gold. So, great opportunity in a lot of stages of development with a positive gold cycle and gold being in a bull market. But we're producing, we're profitable, we're growing, and we have a structure that's very much aligned with investors. Quite unusual for a company of our stage that we have over 40% of the company is owned by insiders. The largest shareholders being myself and my family and another director. And I think that more than anything I can say, really shows our alignment with investors, and that for better or worse, our decisions are going to be made in the interest of creating shareholder value in the long term. We have two assets, South Africa, the Galaxy mine. This is our key operating asset. It's the one that's contributing our production today and the one that is making us a profitable company. And it's quite a history. I'll get into a little bit more detail about it, but it's quite a historic asset. Our areas of our property have been in production going as far back as the 1870s, so 150 plus year history. Over 1 million ounces has been produced there. And we have a global resource there of over 2.3 million ounces. We have a very modest production base today, producing just over 1,000 ounces a month. Even at that level, you'll see we're quite profitable, but we are now have no major investments in front of us, and we're ramping up that production to over the next 4 years, 4,000 ounces a month, or about 45,000 ounces a year at Galaxy. The second operation is Summit. That's in the United States, in the state of New Mexico. And much like Galaxy, we acquired this one in a state of care and maintenance, so it was in production previously. It was a public company itself. It was called Santa Fe Gold, and in the last cycle, it had a market cap of over 100 million US dollars just by itself. It went bankrupt and it was restructured. Why did it go bankrupt? There was nothing fundamentally wrong with the operations, but they had a lot of debt. They had streams, royalty, all bells and whistles in their capital structure, and they weren't very resilient to a decline in the commodity price. So that was an opportunity for us. We acquired this several years ago, and we were basically waiting for the right time where we could put it into production without having to access markets ourselves to raise money through selling shares or issuing more debt. Our strong preference was to be able to do it out of our own cash flows, so it would be completely accretive to current shareholders. I'll tell you a little bit more about Summit as we get to that in the presentation as well. So just again, recapping some of the opening points, we are profitable. We're in production. We started 2025 with quite a bit of debt. We now have no debt on a net basis. We have a lot of growth. It's all internal. We're roughly quadrupling from our current production base in South Africa over the next 4 years, all self-financed. And we are starting operations in the United States with our Summit mine in Q2 of next year. We will be mining in Q2, and our first production will either be at the end of Q2 or in Q3 of next year. And finally, again, I think we can fact check this at some point, but possibly the highest insider ownership of any company of any substance in the gold space. So very much aligned with investors. Galaxy Gold Mines, our key operation, as I said, quite a historic one, been over a century of history. We bought this at the bottom of the gold market in 2000, around Christmas time, 2015. and we've put it back into production. So all the key capital expenditures have been made, and we can ramp up that production this year, going from 1,000 ounces a month to 1,500 ounces a month. So a target production next year of approximately 18,000 ounces. And in 2027 and 2028, that ramps up to about annual production of approximately 45,000 ounces a year. And huge resource base here, 2.4 million ounces. We actually have a series of ore bodies, 21 different ore bodies, and we're only mining from two of them, the Princeton ore body and the Galaxy ore body. And we have this huge resource with all these unexploited ore bodies. Why are we only targeting 4,000 ounces a month as our production rate? It's we are the beneficiary. We're also sort of the victim of the legacy infrastructure that we inherited. And it's a great opportunity for us that we seized to put it into production with relatively little capital. But we are somewhat constrained by that historic infrastructure. It's my view, it's management's view, that we are now at a point where we're profitable, we're self-funding our growth. And if we're at that production rate, getting at 40 or 45,000 ounces a year, we've filled our mill. We don't need to expand it any further. And we can generate cash, which we can then use to, number one, pay a dividend, number two, buy back shares, or number three, if some other opportunity that we think is just as good emerges, we could look at that. But again, trying to avoid any form of dilution for shareholders, and if anything, put money back in shareholders' hands. Just a little bit of before and after of when we took over the Galaxy mine, and what it looked like before and what it looks like now. Obviously, a lot of improvement, but as dilapidated as things looked, it was a huge advantage to be starting with a past producer with existing infrastructure and fully permitted. It's a big deal. It's a huge gulf to jump across to go from green fields and a great resource to an actual operating mine. And so any opportunity to buy something that was in production before and has all that infrastructure and all the permits is one worth looking at. Just a little bit more on the financials. You don't have to wait long for profits and cash flow. 2025, we have half the year already concluded with Q1 and Q2 released. And we are about $5 million USD of operating level cash flow in the first half. Gold, our average realized gold price was closer to 3,000. And our production rate's gone up in the second half. We'll have to wait until we release our Q3 and annual results to go into more detail than that, but other than to say it's gone up. And of course, the gold price has gone up. So I think that cash flow target for 2025, one could conclude, is quite conservative. But you also see the huge ramp up in the cash flow, and looking at in particular, this free cash flow after minority interest line, going from 9.2 million this year to 21 million the following year, and then staying sort of in that 20 to 30 million level over the next several years. Bit of a funny, to see why the cash flow doesn't go up faster as our production goes up. It's because we become fully taxable. We have quite a substantial tax pool, but we've burned through all those tax losses in 2026, and we start paying full taxes in 2027. So huge ramp up. Again, this is also at $3,000 gold. So even at today's price, there's a lot more leverage to the upside. In fact, here we show some of that leverage, 3,500, of course, being much closer to today's gold price, and an NAV per share over $5. That compares to a share price where we're trading at below $2 today. So, of course, you can see the leverage to gold. As I said in my introduction, we offer investors, if you have a positive view on gold and you want to implement that, the Golconda Gold is an excellent way to do that. We do have one of the natural question with assets in Africa. What's the risk? Is it something that could be taken away? South Africa, of course, has a very storied mining history since its the days of Nelson Mandela 30 years ago. There's no history of assets being taken away from anyone. A bit of the price of doing business is you do need what's called the Black Empowerment Partner. And we're partnered with a microfinance institution, which provides funding, microfinance loans to female entrepreneurs in our community. So that's one that we are really proud to have as a partner. And that it's part of why nothing's been taken away from investors is you have this program that's in place, it's codified, it's been there now for almost 30 years, and it more or less works. Summit, that's our asset in the United States. As I said, a past producer, nothing was fundamentally wrong. It's a high grade gold and silver producer, roughly 60% gold and 40% silver. Here's a picture of our mill. It's in excellent condition. It's ready to start now. And part of the reason that we're not starting until Q2 of next year on the mining side is just to, improving our own balance sheet and building up our cash position and our financial flexibility so that we can start Summit without having to tap outside finances. This one, unlike Galaxy, where we have 20 plus year reserve life, we have a shorter operating life, a shorter mine life here of 7 years. However, most of the work that was done on the geological side and putting this site into operation was done at a gold price in the sort of $600 to $700 range. And with the very high grades, we are very confident that we will be able to extend that operating life dramatically. We won't be operating here for 7 years. It'll be, multiples of that. And once we're back in operation and have the cash flow coming from it, we would also look to expand our tailings capacity and our milling capacity so that we could actually increase our annual production. So at these commodity prices, we can definitely keep this operation going much longer. You can see this one also gives us great leverage to gold and silver price. The costs aren't as low as they are with our operation in South Africa, but you see huge cash flows being generated quite quickly here as well. Basically, just a slight loss in 2026 as we're taking it in operation, and then profitable already in 2027. Again, the leverage, looking at the row, $3,500 gold and $45 silver, 153 million US dollar NPV. That's in Canadian dollars, $2.42 a share for us. So that's completely additive to the value from Galaxy. Again, just this value alone is in excess of our current share price. Just summarizing and combining the cash flows from both, you can see a focus. We don't have to look far into the future with our company. 2026, you see the free cash flow generation at the bottom of the slide. If we follow the 2026 column all the way down, $14 million, that's at $3,000 gold and $35 silver. So lots of upside to that number just with today's prices. And then you can see the number growing from there as we progress through the years. Again, another slide showing the leverage and what happens with higher gold price. So the difference to us for $3,000 gold to $3,500 gold is about $1.70 per share in net asset value. And if you have a more bullish view and you think gold is going higher, 4,000 and so forth, you can see the tremendous leverage that our shares provide to investors on participating in gold and silver price moves. So again, just sort of summarizing like how we're creating value and what our catalysts are in the coming years, really just the next year, is number one, ramping up the production at Galaxy. There alone, we're going basically quadrupling our production from roughly 1,000 ounces a month to almost 4,000 ounces a month, with 45,000 ounce a year total production. And that can go on for a very long time with our 2.4 million ounce resource base. Number two, the restart of our mine in the United States in Q2 of next year. I can say, speaking to investors, there's a lot more excitement and interest around assets being in the United States for obvious reasons. So we're really keen to get that going. Number three, we intend to spin out the US assets as a standalone company. And we'd like to do that after we're in production and after we've got it to profitability, which will be Q4 of next year. And why would we want to do that? We're already not a huge company. Why are we talking about spinning out assets? it's our view that we will get a much higher value for Summit as a standalone US only gold and silver producer that's profitable. The universe of investors that would love to get their hands on specifically that kind of investment is huge. And would like to sort of unlock that from the bigger picture of Golconda to the benefit of all shareholders. And if market conditions don't look good for doing that, obviously we won't do it. But I have a feeling that we're going to find ourselves a year from now looking at market conditions that might be even better for that spin out. So, and after all that's said and done, we're talking about generating lots of free cash flow here. What do we do with it? We can't promise anything for sure, other than to say that management owns over 40% of this company. We're going to do what's best for the shareholders, specifically ourselves. We're right there in there with everybody else, and the value of our shares vastly outweighs anything that we'd have in terms of compensation for salary or what have you. So dividend definitely possible, share buyback definitely possible, and also we could ultimately look at other transactions that we could create value for shareholders by being able to self-finance the development of those projects. And with that, I'd love to turn it back to hopefully answer some questions.
Thank you, Ravi. Thank you. There are several questions. So first is that from Jade, for Galaxy and Summit, how do you plan to fund the ramp up and restart without causing too much dilution for shareholders?
Well, that's a great question, because I think it's one of the reasons people really find our shares exciting is we're already profitable. So you can look at our last quarter, even with a very small production base, we're generating profits with our fixed costs amortized over a very tiny production. So we've been able this year to finance our growth, but also pay back all of our debt out of our cash flows without borrowing money, without issuing shares. So we don't have to do any of that. So it's not to say it's a bad thing to issue shares. If you've got growth opportunities and you can issue shares and finance it, that's fantastic. But even better is being able to do it out of your own cash flow. So the investor doesn't have to worry, am I going to be seeing some shares dumped on my head and my ownership diluted?
I see, I see. Next question is that by 2028, you're targeting capital returns. How confident are you hitting that? And what factors could speed things up or slow them down?
So number one factor for us is gold price. And I might have had a different answer 24 months ago. But what is the difference over the last 24 months is we've substantially de-risked our operation and our execution. So we've got ourselves profitable in Galaxy. We've got rid of debt. And so we have a lot of financial flexibility. So if some issue happens, and it's mining, there's always issues, and it's not something that you if you've written down 25 things that could happen, it'll be the 27th thing that actually comes back to bite you. But if you don't have debt hanging over your head and you are profitable, you'll solve it. And that's the position that we're in now. It wasn't where we were 2 years ago. So I have a high degree of confidence. Maybe it won't exactly track our projections. Often things don't work out exactly the way you hope to, but the main factor is that gold price. And if the gold price is like where it is now, the situation is very good for us. If it's even higher, then that's obviously a benefit to us as well. If we're talking about $2,000 gold, it is not, obviously it's not as good. It cuts both ways. We are some shares that provide investors strong leverage to the gold price for sure.